All right. Just want to do a video on kind of why I don't get involved with earnings. And I feel that earnings, people that hold over earnings, it all depends on what style you're doing. So obviously, intraday people aren't even holding overnight. Most of them don't. And you then have the trend followers. So you have the trend followers that might be looking more on long-term trends, seeing stuff break out. Maybe they get in here and just hold, or maybe they look at like a weekly. This is Facebook, by the way. Maybe they look at a weekly and say, you know what, above this level, I'm in. Let me give you another example. Um, Apple, they'll look at like a weekly, maybe say, okay, once it breaks above this level, I'm in and I'll hold. Even through these retracements, I will hold. Um, and there's nothing wrong with that. It's all depending on what suits your trading, your personality, actually, your emotions. Um, these things are the things that will choose or let you see what path you're going to take along this trading journey per se. Because if you feel comfortable during the intraday stuff, then that's what most people try to do it. Actually, I think personally the opposite way. So I feel that people try to do day trading first, then say, all right, I feel like my hair is on fire constantly and I don't like the stress, then go to swing trading, where it should probably be the opposite, where someone should probably look at a weekly time frame and a monthly time frame just to get comfortable with trading and risk management and stuff like that. And yes, with weekly, um, you know, uh, time frames, you are going to have to put a stop that's wider, but you don't have to trade options for everything. Let's say you just buy the stock, you buy the equity per se, and you just say, I want to just get used to moving slow, market corrects a little bit, 2, 3%, 5%. I'm not, you know, it's not really, if I have $100 or $1,000, okay, it moves 5%, so it's just $50. I'm not worried per se, and I could really kind of hone my skills and then work my way to a faster time frame, which would be basically going from, let's say, the weekly to like the daily time frame, to say, okay, now I'm moving more to the swing trader style of things. Maybe I go towards, you know, looking at just holding stuff maybe 2, 3 days to 2 weeks, or whatever makes it run, and then go to kind of day trading, because the charts are the same. It's just that your reaction time has to be so much better when you're day trading. It is what it is. You gotta say, you gotta almost learn also to live with regret. You have to, and you can't let it bother you that you pull profits early and it shoots back up. And then most people then start revenge trading. So they're like, oh, it shot up on me, I'm gonna get it back. It shouldn't. And then they buy the top and don't understand. My thing is always about precise entries and mainly about risk. But anyway, what I wanted to show you guys was about earnings, because you could see there was numerous earnings announcements going on with Apple, and actually Facebook would actually be a really good one, because they actually had theirs um, last night or after hours. So what happens, and the reason why I don't like to do it, because I like to swing trade. I like to swing trade and day trade a little bit, but more like you know basically a mix between the two. Um, but the thing is that we do all this work. I say it constantly, that I do all this work, hours and hours and hours of looking at charts, studying charts, uh, picking stocks, looking at historical charts, um, risk management, all these different things to give myself some sort of leverage, and it still won't be perfect. And if you're looking for perfection, it doesn't exist. So if you're looking for, and that's the reason why a lot of these box systems and stuff like that, because they don't tell you that it's going to take hard work. You can't, if you wanted to be anything else in life, right? Like, so let's say you wanted to be an engine builder. You think you're going to build your perfect engine, the first one you pick up? It's going to take, I know people that build engines. They used to build small blocks and stuff like that, and pop an engine. And I popped a few of them because they were trying different things. They were looking at different techniques. They didn't do it right, so they knew what they did wrong. Experience just means that you did the wrong shit more than the other person. So when you see it, you say, no, I've seen this before. I know that. That's all experience is. And my experience has been that it's just an emotional roller coaster. So let's go to, I actually am showing the extended time frame. So here is last night. I put up the 1 minute just to show how much emotion went on. So let's just take it, and you can only look at the right side of the chart. But let's say you had the earnings announcement, right? So you see it go from 50 to 50. Yeah, what is this? 49 to 53. And if you went long calls or long stock, you are on you're on another planet right now. You think that you've hit the ball, the cover off the ball. Maybe you did options as well. Maybe you even did weekly options because you're like, listen, I want to pop. Maybe I put $200-$300 in, $1,000 in. Oh man, my options are gonna in the morning. It's gonna be, Christmas came early this year, and you continue to go up, and you're like, oh man, I really, at the end of the day, excuse me. At the end of the day, I'm killing it. You know what? Matter of fact, I should be doing this all the time. I shouldn't even be trading. I should just be playing earnings because I make more money. I took this $1,000. This $1,000 might be $10,000 in the morning. Listen, last time Google gacked up, there was options that went from 30 cents to like $4. You do the math. That's a huge return. You're talking about somebody doing $1,000 might be like $30,000-$40,000 or something like, or $200 might be $3,000. Now you're on top of the world. You're up over 10%. Oh shit. Okay, this isn't supposed to happen, but whatever. I'm up so much money, it doesn't even matter. All right. See this little bounce, you're like, all right, I'm buying the dip. Or there's some suckers might, and then you go from this to and then you start to get that sweaty palm. Sweaty palm trading is the worst. Hair starts to get a little, that hair gel is starting to turn to gasoline. Hair on fire. Oh, wait a minute. It can't go down any further. 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 I don't know. What should I do? What should I do? It's sideways. So this is, this is like 5 o'clock, right? And, you just continue to go, oh, shit. Damn. Wait a minute. This is lower than when I'm almost break even. All right, this happened. I don't know what to do. Should I? And dude, I don't want to go through this. I don't want to go through this. It's not. Look, now it's below. So I was up 14% and it went down below. Now I gave back all the gains. I don't know what to do. All right, it's back up above 49. You see where I'm going here? Like this is hard. This is a hard thing to do. So I'm not saying that, there's some people that have systems and stuff like that that they use, maybe straddles or options or whatever, and you can see how emotionally hard this is, and it isn't even, and I just went through the overnight action. I mean, I know it's about 7 Eastern Standard Time. So right here, right now, through all that stress, right? Through all that stress, this low is 48.75. Currently, we are at 50.70. So for all that, 14% swings to both ways, you're up $1. I don't want to deal with that. That's something that I just don't want to deal with. I don't have any leverage. I put in all my time to get this leverage, to get this knowledge, to do the sector analysis, market analysis, study the candlesticks, study the price action, study the price action, study the price action, and then I'm just going to shit it. I work too hard for this money. I can't just shit it away just guessing or gambling. And at the end of the day, Vegas is not that expensive. You go during the week, you can have a ball. You could be dancing on speakers, and you could do all types of stuff. You could say hi to Celine Dion, you could do whatever you want to do. But you think I'm gonna gamble and with all this stuff that this is a business. You got to treat this thing like a business. And gambling is not a good part of business. And at the end of the day, that's not what I want to do. So I just want to show the example. And like I said, there's some people that hold through earnings, but it all depends on what you're doing. If you're a trend follower, swing trader, day trader, day traders aren't doing it. Some swing traders might do it. But if you're going to do it with money like Vegas money. Do it with money that you can lose and not even blink an eye. So, and then if you win, the thing is, the key to that is, and if you win, don't say that, all right, it's like you going to Vegas and you're hitting, and then you say, okay, every time I go to Vegas, I'm going to hit. No, you got lucky. And if you get lucky, just say you didn't got lucky. Don't say I knew it. Let your ego get, oh, I don't ever short this stock. I've seen boom people do, oh, I told you guys never short. When Steve Jobs was like, never short Steve Jobs. Now, oh, never short this company. Rubbish. Okay, don't do this if your style is remotely close to this. That's just my suggestion. It is what it is. This is YouTube, so you could do what you want. But I just kind of wanted to set this video on why I don't mess with earnings and what the reason being, and this emotional, cluster, the rest of that. So hope this helps, and trading well today. The futures are down. Let's look at that really quick. Futures are down. Nothing crazy. Yeah, so let's see. Yeah, so you have we need to, like I said, we need to recapture. Look at my video that I did yesterday. I don't really want to get into it right now. I got some stuff I got to do. You see the Russell's has an engulfing pattern on the weekly. You got the NQ. NQ still looks pretty good to me, quite honestly. I mean, there's nothing bearish or anything from this, but just keep that in mind. Let's see what was it, GC? Yeah, gold futures. You got SI, silver, a little pop up. They're doing some pop up action, so we'll see how that one plays. But I got to do my analysis on these instruments. But again, earnings. Don't do it if you're not prepared for the results. So take care.